Welcome to The Explainer. So today we're diving into something that is just absolutely fascinating. We're taking a deep look into one of the most chaotic, widely misunderstood internet subcultures of our time, the modern meme stock movement. We're going to look way past those sensational headlines of regular people making millions and really examine the shared belief systems, the psychological traps, and how this whole digital phenomenon mirrors historical financial bubbles. I mean, we're talking modern-day Dutch tulip mania here. It really all comes down to this one central mystery. How exactly did a struggling, unprofitable brick-and-mortar video game store accidentally spawn what can pretty much only be described as a financial doomsday cult? What started back in January 2021 as a total market anomaly quickly morphed into this highly gamified internet conspiracy. And, understanding this matters to all of us because it shows just how easily digital echo chambers can distort reality and actually impact the real-world economy. But to understand how we got here, we've got to understand the people behind the keyboards. Section 1. The Quest for Infinite Wealth. Before we can even talk about the stock market, we have to talk about human nature. Our sources highlight a really powerful psychological motivation driving this entire subculture. It's often framed using financial author Robert Kiyosaki's quadrants. So on one side, you have the E quadrant. That's the employee, right? Grinding away at a standard 9-to-5 job, feeling trapped by student loans, and a total lack of upward mobility. Then you've got the I quadrant, the investor. This is where your money makes money for you. And a massive driver of this whole meme stock subculture is this desperate, visceral urge to leapfrog straight from the E quadrant into the I quadrant. It's the pursuit of sudden, life-changing wealth as an escape hatch from the modern economic anxiety that, honestly, so many of us feel today. This desperation perfectly birthed a hyper-aggressive, get-rich-quick culture, which is summed up flawlessly by this rallying cry, Lambos or Wendy's, I'm gonna get my tendies. Now, these investors proudly refer to themselves as apes, which is a term they borrowed from internet forums like wallstreetbets and the Planet of the Apes movies. And this motto, it implies they're either going to become unfathomably wealthy, enough to buy a fleet of Lamborghinis, or they'll lose absolutely everything and have to go work at a fast food restaurant. For them, there is no middle ground. Section 2. Short selling, reality versus myth. Let's look at how the financial market actually functions so we have a baseline. Okay. At the heart of all this is a contentious but totally standard market mechanism called short selling. Here's how it actually works. Step 1, you borrow an asset. Step 2, you sell it at its current market value. Step 3, assuming the price drops like you predicted, you buy it back later at that new lower price. Finally, step 4, you return the borrowed asset to the original lender and keep the difference as your profit. Simple enough, right? But the absolutely crucial detail here is the risk profile. Your maximum profit is strictly capped at whatever price you originally sold it for. But if the stock price goes up instead of down, your potential for loss is literally infinite. And that infinite risk leads us to the short squeeze. When a heavily shorted stock rapidly shoots up in price, short sellers start bleeding money fast. To cut their losses, they're forced to aggressively buy shares so they can return them to the lender. But here's the catch. This massive influx of buying forces the stock price up even higher, which squeezes other short sellers out of their positions. In January 2021, GameStop experienced a true once-in-a-lifetime short squeeze. It was this perfect storm: a heavily shorted company, pandemic stimulus checks hitting bank accounts, massive retail buying coordinated on social media, and hedge funds caught completely exposed. But here's the thing. The ape community radically distorted this objective reality. While short selling is normally just a risky bet on a stock's decline based on bad business fundamentals, the apes' narrative claims something way darker. They believe short selling is this malicious, highly coordinated conspiracy using illegal naked shorts to intentionally bankrupt perfectly good companies, all for tax-free gains. Section 3. Anatomy of the Moss Conspiracy. So what exactly happens when the actual short squeeze ends? Well, to cope with massive financial losses when the stock price inevitably crashed back down to earth, the community invented something called Moss, the mother of all short squeezes. In ape lore, January 2021 wasn't the main event. They call it just a sneeze. Moss is the belief in an impending apocalyptic financial event. Think of it as a modular vessel conspiracy. It's the super flexible theory containing dozens of disparate, often completely contradictory beliefs, but they all serve one singular promise: that short sellers will soon be forced to buy back billions of fake shares at infinite prices. These core tenets of Moss basically act like an infinite money glitch. Apes believe Wall Street has illegally created billions of fake shares, and because of this, they believe they actually own the entire available supply of shares, what's called the float. Therefore, if they lock their shares away in an infinity pool and just refuse to sell, the supply drops to zero and the price will literally go to infinity. In their minds, just by clicking a buy button on a brokerage app, they've magically transformed themselves into world-saving financial revolutionaries who are about to inherit the Earth's wealth. Now, you really have to understand just how big they think this payout is going to be. $67 trillion. Let me put that staggering number into perspective for you real quick. That is more than double the GDP of the entire United States. They genuinely believe the Central Depository, the DTCC, and the Federal Reserve will be forced to literally print this money and pay it out directly to them when the hedge funds collapse. They think they're going to hold the entire global economy hostage until they are paid millions of dollars for a single share of a mall video game store. It is truly unbelievable. Section 4. Gamifying the stock market. How does a massive group of adults convince themselves of this? This right here brilliantly illustrates the mindset. This is a real actual quote from an apes forum. Bro, I play RuneScape. I literally grind for days to watch a number go up 1. They think it's going to be any different now? The primary lens of this entire culture, which remember was born on Reddit, is video games. They treat the incredibly complex, globally interconnected stock market exactly like a massively multiplayer online role-playing game. They actually believe that their willingness to sit at a computer and grind for hours clicking on virtual plants is a directly transferable skill that will somehow defeat Wall Street hedge funds. And this creates a profound symmetry error. See, in objective market reality, the stock market involves complex algorithms, broad institutional shifts, and honestly a whole lot of random noise. The apes, however, view the market as a symmetric player versus player war. They believe they're shadowboxing this hyper-aware, intentional end boss. Usually they point to Citadel's CEO Ken Griffin, who they think is actively reading their Reddit posts and deploying countermeasures. They think they're in an epic, pitched battle, when in reality, their opponent isn't even aware they're playing a game. To protect this incredibly fragile fantasy, the community actively filters reality through strict language policing. You'll hear them use the terms FUD, which stands for fear, uncertainty, and doubt, and shills. If anyone points out that GameStop is unprofitable, boom, that's FUD. If someone suggests, hey, maybe you should take some profits, they are immediately labeled a paid shill sent by hedge funds to infiltrate the community. They completely suppress critical thought by labeling any objective financial analysis, or really just any dissenting opinion, as psychological warfare. Section 5. When reality breaks the myth. So what happens to this echo chamber when reality repeatedly disproves their theories? Well, what we see is a constant, exhausting timeline of shifting goalposts. Every single time a predicted catalyst fails to trigger the financial apocalypse, the narrative simply rewrites itself to maintain the illusion. Take June 2021, for example. They firmly believed a shareholder vote would mathematically prove fake shares existed. It didn't, so they pivoted. They created the DRS movement, pulling their shares out of normal brokers to lock them away in their own names. When that also failed to trigger MOS, they followed GameStop's chairman, Ryan Cohen, into buying shares of Bed Bath & Beyond. And when Cohen abruptly sold his entire stake in August 2022, causing the stock to crash, the apes just invented entirely new, complex layers of conspiracy to explain why he actually sold to secretly help them. This brings us to some fascinating psychological research by Gordon Pennycook on overconfident conspiratorial thinking. It turns out the defining trait driving this absolute refusal to reevaluate beliefs isn't just narcissism, it's extreme overconfidence. It's this wild assumption that they, having read a few Reddit posts, somehow understand complicated global financial systems far better than actual experts. Because they exist in this closed, perfectly sealed digital echo chamber, they genuinely believe their worldview is just self-evident common sense, and anyone who disagrees must obviously be part of a malicious cover-up. This overconfidence creates an ultimate prisoner's dilemma within the movement, perfectly captured by the phrase, no sell, no sell. They demand that no one sells their shares until Wall Street executives are literally thrown in prison. It's a community demanding absolute, unwavering orthodoxy from its members, all while totally ignoring actual economic fundamentals. The tragedy here is that everyone has the personal incentive to sell and cash out early, but if anyone actually does, their whole infinite wealth theory collapses. As we zoom out, we can clearly see the tragic juxtaposition at the core of this explainer. On one side, you have the reality of meme stocks, unprofitable brick-and-mortar retailers really struggling to survive in a digital age. But on the other side, you have the ape version, these same companies elevated to mythological vessels that are somehow expected to spark a global economic rebirth. Much like the Dutch trading their entire life savings for a single tulip bulb centuries ago, it is thousands of regular people pouring their real, hard-earned money into a fantasy completely unmoored from reality. Which leaves us with a lingering, honestly somewhat haunting question to wrap up our explainer today. If a highly organized internet subculture systematically filters out all objective data, rejects all expert analysis, and brutally turns on its own members just to protect a fantasy of infinite wealth, what happens when they finally run out of myths? When the shifting goalposts finally hit a brick wall? What becomes of the regular people left holding the bag? Thank you so much for joining me to explore the chaotic reality behind the meme stock subculture. Keep questioning the consensus, and I'll see you in the next explainer.